Hey there, everybody. Will Nuelle here from Galaxy. Very glad to be here tonight with a portfolio company of Galaxy's Axelar and Sergey Gorbunov. Sergey, maybe if you want to start off with a bit of an introduction about yourself and how you got to this point, I can do the same about myself and Galaxy following that.
Yeah, for sure. This is Sergey, co-founder of Axelar protocol. My background is in distributed systems and cryptography. I studied PhD at MIT. Then I was a faculty at the University of Waterloo for a bit, kind of running a research group. And then since then, I've been focusing on kind of building real distributed scalable networks. My co-founder and I, Yorgos, would build the Algorand protocol prior to Axelar and kind of took that to the market with the team. And after launching it, it was pretty clear to us that we're entering the world of many different blockchain ecosystems. And it's a pretty natural, space for any technology stack. And I think it always comes with fragmentation, and we decided to solve it by bringing robust connectivity rails in parallel. So I guess we'll talk more about it.
Great, great. And I'm Will Nuelle. I am a general partner of the venture team at Galaxy Digital. We make early stage investments around the ecosystem in things adjacent to Galaxy's business lines primarily. So DeFi, financial services, payments, stablecoins, layer one blockchains, layer two blockchains, interoperability, data availability, those kind of all fall under our remit. Galaxy holistically is a financial services firm in the crypto space. We've got a trading franchise as well as a mining franchise, plus our venture business and a handful of other business lines at Galaxy. I am a programmer by background, studied mathematics in university, was a data scientist for a startup in the Ethereum ecosystem, and then joined Galaxy, where I built derivatives pricing software and risk monitoring software for Galaxy's trading, and then moved over into ventures and tend to focus on our technical investing at Galaxy. We are luckily a investor in Axelar, and so I've had the good fortune of knowing Sergey for a couple of years, and can ask maybe some pointed questions about Axelar in the interoperability space because I've been fortunate enough to see it develop. So maybe without further ado, Sergey, the first question. When you were first fundraising, I mean, I remember seeing, talking to you even at the seed round when you and Yorgos had a white paper, right? And mostly technical documentation at that point. You had great ideas about light clients coming to consensus on what happened on other blockchains, right? And then ultimately we invested as part of the Series A round, and you executed on the vision of proving, light clients coming to consensus about the state of other blockchains. And that design eventually became Axelar, which was one of the first protocols to provide general purpose interoperability. What is your current vision for Axelar, and how has it changed since inception, right? If your vision was something different before, how has it changed since then?
Yeah, so from the very beginning, we had a very simple goal in mind is to allow users to interact with any asset on any blockchain with one click, right? And I think, you know, you probably remember our deck. It literally had like that as a mission statement on top of it. And I think since then, we've been executing on that vision, right? I think what we learned along the way is that kind of the technical stack that's required to build that is a pretty complicated stack, right? So you have the core protocol that is responsible for kind of the safety, the liveness of passing messages from one blockchain, but you need a lot of other services around it. You need gas services, account abstraction services. You need high visibility into what's happening across different blockchains through explorers. You need simple SDKs and so on and so forth, right? So I think that's what is really kind of has been kind of interesting to see, almost like an entire new stack for a new wave of applications that have to be built to enable this chain agnostic vision, right? And I think protocol at the very core of it is foundational, but it's only a part of it. I think going forward, the big goal for Axelar in particular and the protocol is to really get into the model where anybody can get connectivity at a fraction of a cost. Okay, so today Axelar is connected, over 65 chains. It's the most of any interoperability protocol outside of Cosmos. And it connects heterogeneous protocols, so all kinds of blockchains with all kinds of consensus mechanisms and routes between them. So far, it's still been, relatively, let's say, challenging to integrate new networks, right? Because of the protocol, even though it's the most scalable, we want to bring it down even further. Right? We want to enable anybody to plug and play with a fraction of a cost of what it takes today, with a fraction of a time that it takes today, without having to call any vendor, without having to call any support. And so that's really the big focus for us over the next couple of years, is to really kind of put Axelar as a platform in place to be an open stack of interoperability, right? Make sure the protocol is well understood, the specifications are easy to follow, connections to it are as easy to follow as possible. So yeah, that's what we kind of will be executing over the next little while. So
yeah, sorry about that. Do you feel like the vision got bigger as time went on? Do you feel like you had the big vision of the whole stack from the get-go? To what degree did it expand versus, you came across opportunities that you didn't quite expect in the history of Axelar?
Yeah, I mean, I don't think we fully kind of realized what is the full, what does it mean to have a full stack, and like what are the different components. You kind of learn those things as you build along. I think the problem got a lot bigger than we anticipated, right? I mean, you may remember when we spoke a couple of years ago when we started out, there was only like let's say a dozen blockchains that really mattered in some sense, right? And everybody was like betting on those. And even back then, the biggest use case was like Bitcoin or Ethereum, right? And everybody was asking for that. I think since then, the explosion of layers across the Web3 has been insane, right? Like not only blockchains themselves, you have layer twos, you have layer threes. Now you have fragmentation within functionality of different layers, right? You have restaking layers, settlement layers, execution layers, data layers, right? And so, like I said, I think the fundamental thesis that we always had is that, horizontal scale comes with fragmentation across the stacks, and you need to keep everything as connected as possible as the space keeps on growing, which is, I think, we're going through right now.
It was sort of counterintuitive, when you started to launch an interoperability protocol that created a new blockchain with its own consensus. I remember thinking that was kind of, one of the non-consensus bets that you guys were making. It symbolically had the effect of adding to the complexity of cross-chain movements. How do you feel about that decision, and how it's either contributed to or hampered Axelar's mission over these years?
Yeah, I mean, it's the best decision I think that we made. The bottom line is the following. It's actually pretty simple. So we, as you said, operate in a hub and spoke model, right? So what it allows us to say is that any connection that's connected to Axelar is automatically interoperable with everyone else in the ecosystem. Okay, so no other connections need to be made, no other maintenance needs to be made. The protocol knows how to translate and route the messages. And so what that means is that for every connection, it's really linear amount of work to get the new network interconnected with, dozens or thousands of chains. Okay. The alternative extreme of this is what's known as a peer-to-peer topology, where everybody's interconnected with everyone else. Yeah. Now, everything is interconnected with everything else is fine if you're talking about 5 or 10 networks, but you're really looking at the quadratic number of connections that you have to manage and maintain across it. And so that doesn't really scale if you're talking about hundreds of connections, right? The management overheads go higher, the engineering overheads go higher, because you have to manage everybody in a pairwise way and kind of verify, one chain with respect to another chain. Security risks have to be managed in a pairwise way. If one chain goes down, you have to, you can't just suspend something at a hub like Axelar. You're going to have to go and like do something manual for every chain it's interconnected with, right? So it's very hard to scale. And if you look at the internet is not made up of everybody talking directly with each other. It's made up of kind of big hubs of connectivity that have some peer-to-peer topology in the middle, right? And so I think this is the similar philosophy that we took with Axelar. I think on the blockchain space, this problem of management and cost of connectivity is even higher, right? That's why we don't have everything connected with everyone else by default, because the costs are higher to both connect it and then maintain it. And so I think hubs are really the most economical, beneficial, and scalable way that we know of today. And I expect there potential will be other hubs in the future.
It's classical graph theory, right? It's n
Exactly.
times n-1/2, right? Is this complexity of the pairwise connections. So you can see how
Exactly.
that scales as the number of, as you said, maybe the biggest thing we didn't understand at that time is how many layer ones there'd be, how many layer twos there'd be, and now we're obviously in a universe where that's scaling probably exponentially at this point. What specific cross-chain services or products does Axelar currently offer to developers?
Yeah, so their basic kind of a functionality is like token transfers that you can easily obtain, right? So pretty standard. So you can move your tokens from one blockchain to another. The new wave of development we're seeing using this primitive called general message passing, right? And the idea there is that instead of making users move their tokens around, you can just link your applications together across chains, right? And you can link a wallet from one chain to an application on another chain, and that allows really a user to interact directly from their wallet to an application that could live somewhere else, right? And so in the same way as you have composable smart contracts on Ethereum, you can have composable smart contracts and applications across different blockchains, right? And I think this is really powerful trend, and from Axelar as well, we're seeing more and more volume. Actually, the majority, I think, volume today is through the network using this primitive of general message passing. There's another very exciting service that we just rolled out. It's called Interchain token service, and the basic idea there is that for developers that want to launch their token everywhere, you can go with a very simple UI where you can just literally specify dozens of chains to deploy your token on, click deploy, and your token will automatically get deployed everywhere, right? And the beauty of it is that it's going to be automatically interoperable across chains, so you can send it back and forth. It's going to have the same address everywhere. It's going to have the same symbol everywhere. So from a front end perspective, it's very easy to aggregate on top of it. So that's really an exciting service. We just rolled it out in beta a couple of months ago. We've seen over 1,000 different tokens being deployed, using it, everything from meme coins, to high-profile stable coins, and real-world assets are starting to leverage it. So yeah, there's a lot many other services, but maybe I'll emphasize like those two as good examples of what a lot of developers are doing these days.
Maybe if you're willing to zoom out and talk about the broader interoperability space, what would you say are some of the key trends in the cross-chain interoperability space, and especially now versus kind of a couple years ago, with competitors, both we can mention Layer 0, we can mention Wormhole to some degree. What would you say are some of the key trends in the design of cross-chain bridges and interoperability protocols broadly?
Yeah, I mean, I would say, from a competitive perspective, everything is sort of starting to converge to a couple of, good players, let's say that, because like I said, interoperability by itself is not cheap or easy to develop, right? So, you need a significant capital to really scale it. You can build a token bridge relatively easy, but if you're really looking for interoperability platform, right, with primitives like I described, like general message passing, then the costs are there. The new trends that we are pushing as well is actually leveraging different types of validation logic, right, to authenticate different blockchains. So as an example, I mentioned that Axelar is moving into this OpenStack platform where anybody could connect without too much friction. And so there, what we're starting to do is actually leverage a lot of validity proofs, or like zero knowledge proofs from different blockchains, if they're available to kind of automatically connect to those stacks, right? So you can imagine, as an example, you have a layer 2 that produces a zero knowledge proof of validity. You can automatically plug that into the Axelar and get interoperability with other chains, right? And so you can only do it with Axelar because Axelar is programmable and open, so anybody can do those things. So zero knowledge, live clients, we're seeing more of them. And I think the new trend, which I think is quite interesting, is around what's known as like chain abstraction, right? It's a new, kind of a buzzword, but in some sense, the concept we've been working on for the last couple of years. Basically, idea is you want to abstract all the complexities of interacting with the chain for the end user, right? Everything from the gas, having to pay gas, to having to switch, in MetaMask one chain to the other, and so on and so forth. So all of those things you want to be able to abstract. There are a couple of different initiatives from a wallet side, from provider side, like SDKs, to abstract gas, to abstract wallets, to abstract all the chains together. And in all of those movements, like interoperability is the key enabling building block, and working with a lot of partners to make those things happen. So yeah, those are some of the examples that are kind of pretty recent.
It's actually interesting you mentioned ZK, ZK Lite clients. I was gonna ask you about those specifically. I mean, 4 years ago in 2020, it was almost unthinkable. It was like on people's radar that maybe one day you could have zero knowledge proofs of a light client that could, sort of arbitrate for message passing between blockchains. But the practical limitations were so severe, with performance and costs and other things like that. What in your view changed so fast? And do you think ZK Lite clients are the future of bridging, or they're just useful for specific circumstances?
I think they're useful. I wouldn't make it a blunt statement saying that they're going to replace, all the other validity methods, because they still have their trade-offs, right? So as an example, we talked about complexity of building these things. If you have a chain that has a complicated, consensus logic, building a ZK Lite client, it's a long journey, right? Then it will take some time, and it will take some engineering effort, and then you're going to have to write verification logic for the destination chain. Let's say Axelar, in this example, if you're connected to the Axelar hub, the verification logic, you're trying to keep it as simple as possible, and as compact as possible, so you don't blow up gas costs. But sometimes it's actually not that cheap. So concretely, let's say, I'll give you an example. We evaluated connected to Ethereum using Light Client versus ZK technology, right? And we've done actually a research project with an external team that was leading it. And they came back and said that actually verifying a standard Light Client of Ethereum on chain would be a lot easier to build and a lot cheaper to verify than verifying something like the zero knowledge proof of validity of Ethereum itself. Right? So again, it comes with trade-offs. I do think it makes sense in certain cases. I think for layer twos in particular that come with ZK validity proofs by default, it definitely makes sense to leverage those if they're available.
Yep. Maybe to shift a little bit into, let's call it, partnerships and some of the focus on the go-to-market side of bridging, because bridging isn't all about the tech, and interoperability is not all about the tech, as I think we know. You've obviously been integrated into many crypto native applications and players, DYDX, Osmosis, Uniswap, Frax, Lido, and others you guys have been involved with. You recently announced, partnerships with large enterprises like Apollo and JP Morgan as well, and been involved in some of the cross-chain interoperability projects with private blockchains. Can you share a little bit more about your experience working on that project with Apollo and JP Morgan, and how that experience has differed from a go-to-market perspective than just working directly with the DeFi kind of crypto native protocols?
Yeah, so I think the biggest asset class that we're seeing from these institutions, right, is really RWAs, right, real world assets, and tokenization around them. We actually, in a similar vein, announced partnership with Deutsche Bank last week, which is similarly entered the program to kind of figure out how do you leverage blockchain technology to really provide more efficient settlements, right? So the use cases that they are looking at are actually quite interesting, is where you have assets on one chain and you want to perform, or on multiple chains, and you want to perform settlement across them very effectively. If you read the report that JP Morgan and Paula put out, it's a very comprehensive report, and they say something like over 3,000 steps, right, could be all reduced into one transaction on a blockchain. Right? 3,000 steps that they would have to have in the manual processes, kind of doing these portfolio rebalancing behind the scenes. I don't know what they do for for the 3,000 steps, spreadsheet management, reconciliation, and so on and so forth, right? So it's really astonishing to me. And so with a lot of them, what happens is that when they issue an asset, or when they're performing these rebalancing functions, they want to make sure they do them on a blockchain or in an environment that they have some clarity about, right? Whether or not it's regulatory clarity or technical clarity, maybe it's like a permission blockchain, maybe they have to, KYC the validators. I don't exactly know all the rules, but this is the setting, right? Is that the blockchain itself, where it has certain functions, need to have very clear regulatory and technological standing that they understand, but they still want to be interacting with everyone else, right? Public blockchains, other permission blockchains, other banks. And so this is where interoperability becomes critical, right? Is being able to facilitate these types of deployments in a private, maybe more isolated or restricted environment, but communicate to the outside blockchains and outside assets to rebalance portfolios and so on and so forth. So yeah, it's very exciting to see this asset class being sort of created over the last few years, right? And I think a lot of the banks and a lot of the larger institutions are really looking at as the way to save money, right, and save costs for operating very big, large asset classes.
Maybe just to dive into the softer part of that partnership, like as opposed to, the specific reasons they're going to use it. What's it been like to work with these institutions? You see both sides of the world as a partner to both sides, sort of maybe you and Chain are unique in the degree to which you've gotten access to both sides of these worlds as opposed to an individual silo. What's your experience been like working on these partnerships with large financial institutions versus what you've seen among, crypto native players, from process and relationships and, kind of the general interaction with those folks?
Yeah, so first thing I'll say, I started speaking with some of these institutions, over 5 years ago, back when we were doing our grant. All of those conversations were with R&D departments. Okay, in most of the cases, institutions were trying to figure out what and how, and like, how do you do this? This time around, I think it's much more exciting. A lot of these initiatives are actually driven by the product teams, okay, that have a concrete goal in mind that they want to show, maybe at this stage, like a POC to the manager, to the bank. These are product teams, right? Product teams that are there to build products that get shipped to the users, that have a concrete cost saving function for the enterprise or their end users. So from that perspective, actually, I was very surprised that they pulled us into the timelines, they pulled us into the threads, and it was much more engaging from their side than all the previous conversations that we've ever had, where it was always sort of the push from our side. So yeah, I'm very excited how these kind of partnerships sort of evolved over the last few years and the conversations.
How do you expect them to kind of continue to evolve in terms of the interest of those players to continue to get deeper into the stack? Obviously, seems like one of the core features of Axelar's position in that space is, you're providing interoperability fundamentally between permission blockchains and public blockchains. Is the interest level ramping up, or it was a test and ramping down? What have you practically seen?
Yeah, like I mentioned, right? We've seen more and more banks. So like last week we saw, the Deutsche Bank entering a similar program, right, with the Singaporean Money Authority. So they're actually going to be a part of the same pilot, and they're testing the technology. And yeah, I think after the initial announcement by JP Morgan, I think a lot of the other banks sort of woken up in some sense, right, and started their conversation. I think it depends on the regulatory landscape as well. Maybe in the US, some of these things will be slower. Maybe outside of the US, some of these things are being embraced a lot faster. but the conversations are definitely progressing.
And then maybe if to shift back onto the more crypto native side of things, if you had to think about, your strategy on that side, where's their growth to find? What's Axelar's sort of unique positioning for the next, let's call it 12 to 24 months on the crypto native side? What applications do you think are uniquely good to partner with? And which ecosystems are a focus for you?
From the ecosystem side, look, we've been trying to guess, bet on the right ecosystems for the last 4 years, and you're never right on those things, right? So we decided to have a very simple strategy. Like I said, we're gonna reduce the cost of integration, make sure it's negligible, and make sure everybody gets connectivity. Okay, and so whether or not you're a big funded, venture capital, ecosystem versus, kind of a crypto native with fair token launch ecosystem, you should be able to get connectivity and you should be able to interact. But we're going to make sure that cost is as low as possible to enable those things. So that's on the ecosystem side. From the application side, I think we're seeing this whole trend of applications moving into having cross-chain support in one shape, form, or another, right? As an example, this year we've seen DYDX move to their own chain, right? Connectivity for them was critical. Axelar actually provides most of the connectivity to the DYDX chain with on and off ramps. And I think we're continuing to see this across major assets, with Frax, with Onda, with like Centrifuge. Pretty much everything that we know in the space has a product market fit, wants to be everywhere. And that's what we're going to enable, is like easy ramps to be kind of across all the chains for the apps.
Maybe just flash question here. Key milestones or features that we should be paying attention to in terms of product development for Axelar in the next 6 to 12 months?
Yeah, the key upgrade is going to be this introduction of the self-service model to build your own connection to the Axelar that's being rolled out right now. We already have over a dozen of teams building their own connections from all ecosystems in the space you can think about. And so once these connections go through the DevNet and they're going to start transitioning to the testnet and mainnet over the next months, I think that's going to be super exciting. It's going to really bring a whole new level of connectivity to the space.
Amazing. Well, I think we're pretty much at time here. Thank you, Sergey, for joining us today, and I had a real pleasure speaking with you about the future of interoperability.
Awesome. Likewise. Thanks for having me.
Okay. Bye-bye.